Hello, everyone. My name is Amber, and I work with Telcoe Federal Credit Union. I'm the marketing specialist, and I actually recently graduated from Arkansas Tech, so I'm fairly new to my position. But I'm here today to kind of share with you guys some financial wellness tips and kind of give you a little bit of insight as to the products Telcoe has, as well as tell you what I've taken advantage of and share some of my personal experience. So let's get into it. Alrighty. So this is kind of what we'll be going over. We're going to talk about goals. I'll tell you guys about some of my personal goals and how I'm achieving those and kind of how my finances are fitting into all of this. I'll share a little bit about how you can create your own budget and kind of share, like the little things that add up along the way. For instance, eating out. So we all love to eat out. I know I love to eat out. I don't like to cook at home, especially during the week because I've had a long day at the office and I just want to grab something on my way home. But as we know, inflation is on the rise. Everything is very expensive. So what I do is I meal prep. This works for me because I'm constantly on the go. I'm in college still. And so doing college work in the afternoons and working all day keeps me very busy. So meal prepping keeps me in my budget and it keeps me eating good and healthy. And so this is just something small that I do. Another thing that helps is foregoing that $5 coffee in the morning. They're probably much more than $5 now, depending on all the add-ins that you may get into them. So just foregoing that every morning and maybe cutting back to just once a week or once a month or just on payday can really make a huge difference because you're just saving that extra money that you're not spending in the mornings. Another way you can do this is to invest. You can talk with financial advisors on how you can invest. Maybe you want to open an IRA account or you want to know how to maximize those benefits for your 401k. And then just protecting your financial future. So we all need tires at some point, and we definitely have something break and we just don't realize it, or maybe we need an oil change and we don't have the money to get an oil change because we feel like we just got one. So I know, at least for me, to get an oil change, it's about $80 when I go to like the Take 5 down the road or something. And just in this last year, I was driving an hour to go to college every day. And so I popped 2 tires within 6 months, just being on the interstate all the time. And I definitely didn't plan for them, as no one does. But since I've been at Telco, I've really tried to zone in on my financial habits and how I can save. That way, next time something like that happens, I have all this money put back for it and I'm not stressed about taking it out of my checking account. So, just having a little bit of an emergency fund, or you can call it a rainy day fund, can be super helpful in the long run. So as far as financial goals go, it really depends on what you're saving for. Maybe you have kids and you're trying to save for college, or maybe you want to buy a new car, or you don't have to want to buy anything. Maybe you're saving for vacation or you're saving for Christmas, or you just want to buy yourself something nice. We have products for all walks. So for me personally, I started an emergency fund and I also have a vacation club account. So I know my emergency fund is only for emergencies. Like I said, I popped 2 tires, so I'm down on my luck in the tire department. And so I have been saving money because they're not cheap. But I also have a vacation club account because I'm building up that PTO just like every other working individual is. And eventually we all want to take a nice little vacation, whether it's just we want to take a Friday off so we can have a long weekend, or we're planning a week-long trip to go somewhere special. It's always nice to have that money put back, and so we don't have to come up with it on the whim. So for me, I have a little bit of my check taken out through payroll deduction. And with Telco, payroll deduction is offered. So whether that be you use an employee intranet, such as Workday to set up your payroll, or whether we send something in for you, this is just a way for you to have that out of sight, out of mind. Many people work best when their checking account is not with their savings account because it's not as easy to transfer as it would be. So basically, it's like a bill. So for me, it's like a bill. I know it comes out of my paycheck as soon as before I even get it. And so basically, the way that I think of it is like, oh, well, this is just something I have to put back for later. So let's say I have $100 coming out of my paycheck, and I've got 50 going to my emergency fund and 50 going to my vacation club account. Well, when I get ready to use those, I know that they're right there, and I have not even thought about them or looked at them in a long time. So I'll likely be surprised once I see, the amount that's in there. And I also have this little chart over here up in the corner where this just kind of shows you how much you could save each year if you just put back a little bit per pay period. So let's say you get paid twice a month, which is pretty standard for most places. So let's say you put back $5 a pay period. Well, at the end of the year, you have 70 extra dollars. And if you're not used to saving any money throughout the entire year, that's something you have saved. That's $70 that you've put back, and that adds up over time. And let's say if you're feeling adventurous, you want to put $30 back. So that is $60 a month. And at the end of the year, you've got $420. Let's say you forgot to save for Christmas all year, because I try not to think about Christmas after it goes until it gets here again. There's 420 extra dollars in your Christmas club account that you can use for gifts. Now, let's say that you don't have any problem saving for Christmas or vacation, you've got it down, but you need an emergency fund. Let's say you have a short-term goal, and this could be, let's say you want to get a dog within the next year. Dogs are expensive, and especially if you want like a special breed. I know I really want a basset hound so bad, and so I've been saving my extra money so I can get me one day and not be stressed and make it a financial burden. So let's say you want to get a dog, or maybe you want to get a new cat, but you really need to save because you don't want to be stressed out and you want to be able to enjoy this. Let's say you put $5 back a pay period. Well, that'll give you a little extra money at the end of the year to just buy those little necessities or those little toys that your dog may need. It could be something as small as that. Well, let's say that you have, we'll call it a medium-term goal. This could take 1 to 5 years to save up for. So let's say in 1 to 5 years, you want to be able to buy a new car, and you want to be able to put 20% down on this car so your payments are as low as they can be. Well, with interest rates on the rise, this is a fantastic idea. And so you're putting back money for this car. And the best way to do that is, let's say you want to have a $400 car payment a month when you decide to buy a car. Well, if you start payroll deducting that now, or payroll deducting half of it now, then you'll kind of get in the hang of it's a bill. That's your car payment. And so you're already used to that. And so when you go buy this car, not only are you going to be able to put a ton of money down on it, you'll also be able to be in the habit of already making that car payment per se. Now, let's say you have a long-term goal. Let's say you want to buy a house one day. Buying a house is fantastic. It's a big deal. So how are you going to get there? Let's say you want to put 20% down on your house. Well, if you start putting just half of your house payment, you'll have just a little bit saved up, and you'll be able to put more down, which in terms will usually help you get a lower payment. So just setting these goals, and they could be large or small. You can always start small, work your way up. Let's say you want to buy a new refrigerator, and it's going to be a $1,500 refrigerator. Well, that short-term goal, you can start putting back that payment now, or you can start putting back that money so you can pay it off in full when you decide to go buy that refrigerator out of pocket. And then you're not stressed because maybe your refrigerator quit. Well, you've already been saving this much, so let's go ahead and pay this much off, and maybe you'll have a payment. Or, well, I've got this much, so let's see what kind of refrigerator I can get for this amount. It's just kind of like a responsibility thing. It's an accountability for yourself, because you've not been able to save money, or maybe you're not saving as much as you want to save. So how can you get there? You know, what are your goals? Where do you want to be financially in 5 years? And while we always set deadlines for our goals, your financial wellness will change. It fluctuates. You could be making amazing money, and you could be doing all the saving in the world, but there will always be times when we get stressed about our finances. You know, we live in a very money-based world. We need money to do anything. So it's okay to feel like you had to push that goal back a little bit farther because your financial situation isn't where you want it to be right now, but it was 2 months ago. You know, just it's okay to reevaluate and maybe look at your budget and move some things around to see kind of what's working now, because what worked 2 months ago may not work anymore. And just being committed, getting your whole family involved, your spouse, your children, and get them on the bandwagon of how can we be financially healthy and financially happy as a family. So I know for my partner and I, our finances are separate, but we really work together on the house and how we can make the most of our house. We have lots of renovations we want to do. And so we've started very small and we've worked our way up. We started from, you know, painting the walls in the kitchen to buying a new living room set. And it's these small steps that we've taken to get us here, from saving money and really just taking our time and understanding that we're not, while we have a deadline for ourselves, it's okay if we have to push it back every now and again. And it's okay if our financial situation changes a little bit. So I'm going to talk a little bit about growing your nest egg. So, and then I'm going to go over some statistics, because when I think of the numbers in this and with finances and other individuals, it kind of puts it in perspective that nobody is alone if they don't feel like they have it all together in their financial situation. So right now, 19% of people that were surveyed said that during the past year, their expenses exceeded their income. Like I said previously, inflation is on the rise. So what can we do to combat that? What can we do to make sure if anything happens that we've got a little bit of money tucked away in a nest egg that we could use? And while that won't fix every problem, if something were to happen and you lost your job, at least you've got that little bit of extra money where you can pay a bill, or, you know, you've got a little bit of extra just in case anything happens. Just 46% of Americans have a rainy day fund at all. So that's not a large number of people considering how many people are in the world. So just having just $5 coming out of your paycheck can really make a big difference. And while it may take time to build up, you'll know that you save that money over time and you built that up for an emergency in case anything were to happen. 60% of Americans are saving less than 10% of their income. There are many different budget methods out there. There's so many, and not everything works for every person. Me personally, I do the 50-30-20 method. So I have student loans, and so I put 20% of my income towards my student loans. And that doesn't work for everybody. Other people have responsibilities, other people they have kids. And so just kind of finding, how can I break my paycheck down to save some money and also to, you know, make sure that I'm doing what I need to be doing to be financially well. And then 21% of Americans are saving absolutely nothing at all. And this is scary because things are constantly changing. And so let's say it's just $5 that you're foregoing for that coffee to put in a savings account. That's an extra $5 that you have saved for anything that could come up. Let's say that your sink is broken and you've got to have somebody come out and fix it. Or let's say that like I said earlier, you have to go get an oil change and you didn't realize you needed one until it's here. And so you just have that little bit of extra money just to get you through that financial burden. As far as budgeting goes, like I said earlier, budgeting works different for different people and their income. So really, an overall general rule that we like to share is to calculate your monthly expenses. So this could be your mortgage payment or rent, your utilities, car insurance, credit cards, if you pay for daycare, if you have student loans, or just your cell phone. Calculating these expenses and like how much you really are spending on bills in a month. And then you need to add up all your sources of monthly income. So let's say you have just one monthly income, you'll add that up, or maybe you have a side hustle that you do. So you'll add everything up and how much you're making that month. And you're going to subtract your expenses from your income. And this is your discretionary income. All your necessary expenditures, such as if you like to tithe, your gas, or your food, will go into this. You subtract the necessities from the discretionary income, and you can see how much is remaining. You can decide how you want to use that extra money. You can save it, you can use it for your debt. I know I use a lot of mine for my debt, or you can also spend it. And we really, really like to promote payroll deductions so people are saving it. We want people to forgo that $5 coffee. We want people to eat in when they can and save their money because we offer payroll deduction. With payroll deduction, you really can automate it like a bill. You can add it into that monthly expenses that you're saving and putting back. If you want to say, even if you have no goal in mind that you want to save for, just having a little bit of extra money for a rainy day is never a bad idea. We always want to prepare for the unexpected and just ask yourself, what do you do when life happens? What do you do when you have a flat tire? What do you do when you are laid off from your job or your car has a mechanical error? You can protect your financial future by having an emergency fund. People call it a 911 fund, and it's really just designed to like cushion that fall from unexpected expenses. A lot of people try to have at least 3 to 6 months of living expenses saved. And if you're just starting and maybe you set a goal of $1,000, that's just $42 twice a month. And maybe your goal is lower than that. That's totally fine too. Just saving that extra money and putting it back. That way, when you hit that goal of 1,000, you can be proud of yourself because you saved that money. And then just to be sure, that the account that you're putting money into has interest coming in. That way, you're getting paid those monthly dividends, but you can also access it in case you need it. Because like this says, life happens and we need to be able to get in those funds if necessary. And then also just knowing how to say no. What is truly a necessity and what's a want. A true necessity is your tire is flat and you're on the side of the road and you need a tire right now. And then a want is, oh, I want to get a new car because there's this new one out and I just really love it. Or I want to get the new iPhone 15 that's about to come out because it's new and it looks so cool and I want all the features that comes with it. That's more of a want. A necessity really falls under that oh my goodness, what am I going to do if I don't have this? And we're going to get into credit score a little bit and how much your credit score can really cost you. So your credit score is just a 3-digit generated number, but it's generated by a mathematical algorithm, and it's used for your credit report. So there's many, many models in existence, but one that dominates the market the most is the FICO credit score. You may see this on some of your credit card accounts, or maybe you have a Credit Karma account that you can see this on. The FICO score usually ranges from 300 to 850, and the higher number indicates a lower risk, which in turn means like higher number, you could potentially get lower rates on loans and better terms. And over here, I've got a little chart that kind of goes over how your credit score is calculated. So your payment history makes up the majority of it. So, like I said, I have student loans. So making that on-time payment is very crucial for me because that makes up the majority of my score, and I want to have that 850 credit score, as does everybody. And so making sure I'm making those on-time payments, this can be done by automation through your account, and then 30% makes up the amount you owe. A general rule is really to try to keep your debt to income ratio below, or your credit usage below 30%. That's really kind of a general rule, and that's a general rule I use for myself as well. Um, because you really don't want to use a credit card unless you already have the money. Student loans and any type of loan is a little bit different, but just I know I have credit cards and I do not use them unless I have the money to spend on them. And then over here, we'll see that your credit, 15% of your credit history is made up of the length of your credit history. So how long you've had that credit card, how long you've had that loan. And then 10% is your new credit, and types of credit is 10. So you can have multiple types of credit. So I have revolving credit, which would be my credit card. And then I also have an installment credit, which is my student loans. So I said earlier, I talked a lot about foregoing that $5 cup of coffee or eating in. And a lot of this comes from convenience. We don't want to have to make coffee in the morning because it's going to take too long. I can just grab it on my way. Or we want to get delivery for our groceries because it's only $10 a month for that subscription, and it prevents me from having to take time to go to the store. Or I can just get DoorDash tonight because I've really got a lot of homework to do, and it's really not that much more expensive if I just do that. Or let's say like HelloFresh. Well, let me just get HelloFresh and I don't even have to go to the store, and they can just send it to me and I'll cook all week. And then you don't cook all week and all this food's gone to waste because it's expensive. All of these delivery services add up, all of these subscriptions add up, and they can just make your bills go much, much higher than they ever need to be. Now, I completely understand loving convenience. I live near the city and I love the convenience of being able to just run up the road to grab something. So, to combat that, these should only be considered after you've met that emergency fund or retirement fund or vacation fund goal. So, let's say you want to put $10 a month back. Make sure you put that $10 a month back, and then you can look at doing some of these subscriptions, or you can look at maybe getting that $5 cup of coffee in the morning. GreenPath which is our third-party partner, has a lot of great articles on the cost of convenience and how to really save money. They partner with us and they help a lot of people with debt and debt consolidation. I know I've spoken to them personally about my student loans. I wasn't sure if I should consolidate or if I should just pay them separately because I had multiple loans. And I was able to schedule a call. They're open till 9 o'clock at night, and schedule it when it was convenient for me, back to the convenience. And she spent an hour with me going over all of my budget and going over, all of my expenses and really what's going to be the best course of action. And then sent me this booklet with what it would look like when I paid off my student loans and how fast I could do that and what I needed to do to get there. And it was extremely helpful, and it really only took an hour of my time. And this is all free for our members as well. So I spoke earlier a little bit about making budgeting a family event. So we do offer youth accounts here at Telco. So you can open a savings account for your child or grandchild, and you can payroll deduct for them. Let's say you want $5 going to your account and $5 going to their account. That's wonderful. You're saving up money for anything. Maybe it's college, maybe it's for their first apartment. And so we like to tell people, especially on children's birthdays, trying to steer them in the direction of saving half that birthday money. Let's say they got $20 for their birthday. Well, what if we go deposit $10 into your Telco savings account, and then we take the other 10 and we go spend it at the store? taking them in the branch and really showing them the value of saving your money and then showing them how much they had saved in that account can really, give them the motivation to be like, oh my gosh, like make them excited because they have saved that money and you've helped them save that money. Like I said, this can all be done through payroll deduction. And they can make deposits at the branch. So it's very simple, it can be very hands-on or as hands-off as you would like it to be. We really try to be more convenient for our members because we know that everybody is busy. We all have lives and jobs. So we try to make a lot of our services and products really work around our members and how we can better serve them. And really, we just want people to start that conversation with themselves and with their children on how you can get your family on the same page about money. We offer scholarships for trade schools and universities every April. April is our youth month. The student has to be a member of Telcoe in order to apply. And so just starting them as a child and, really working on that, how do we save money? Let's go put part of your birthday money in this account can really kind of grow that relationship between members and Telcoe and also help them be excited to apply for that scholarship one day or take that money out because they're going to get their first apartment one day. We also have student checking accounts. Our checking accounts are really awesome. One thing we do have, since the parents would be on the student checking account, is they can limit the daily amount they spend on their debit card. So let's say you don't want them spending all their money at Starbucks on the weekend. We offer a limit. So let's say you want to cap their limit at $50. They're supposed to go out to lunch with their friends and spend the day together. So you can limit that where they can only spend that much and they're not overspending or overdrafting anything in their account. Alrighty, that's all I have for you today. I really just want to kind of go over again that Telcoe really is here for our members. We really want to help you guys save some money and build that emergency fund up. And if you have any questions, you can always reach out to the email on the screen or call the extension, and we'll be happy to get you in contact with one of our specialists. Alrighty, thank you.